Have America's closest allies discovered economic pressure points powerful enough to reshape future trade negotiations? From the fertilizer that helps grow U.S. crops to hundreds of billions of dollars invested in American markets, Canada and Europe are increasingly examining areas where the United States depends on outside support. As geopolitical competition intensifies, relationships once viewed as mutually beneficial are now being evaluated through a strategic lens. The result is a growing debate about leverage, economic security, and long-term national resilience. Your roadmap to the latest in auto, welcome to Highway Herald. Today, we're examining a series of economic vulnerabilities that are drawing increasing attention from policymakers on both sides of the Atlantic. And it begins with a resource so critical that modern farming simply cannot function without it. Canada's potash grip, America's farm risk exposed. The United States remains one of the world's agricultural giants, producing enormous quantities of corn, wheat, soybeans, and other essential crops. Yet behind that strength lies a little-discussed weakness: potash. This critical fertilizer ingredient helps improve plant health, increase yields, and support modern farming productivity. The challenge is that America imports more than 90% of its potash supply, with most of it coming from Canada. Germany has reportedly begun assessing this dependence as a potential strategic leverage point. Meanwhile, Saskatchewan's vast reserves and projects like BHP's Jansen mine are expected to strengthen Canada's dominance even further. For farmers already dealing with higher fuel, labor, and equipment costs, fertilizer security is becoming a growing concern. But fertilizer isn't the only area where dependence creates leverage. Beyond crop fields and food production lies an even larger pressure point: hundreds of billions of dollars in Canadian capital woven throughout the American economy. The $733 billion card, Washington's growing concern. Beyond trade and agriculture, Canada holds another significant card: investment capital. Canadian firms and pension funds currently maintain roughly $733 billion in U.S. investments, making Canada one of America's largest foreign investors. These holdings span infrastructure, transportation networks, technology companies, commercial real estate, utilities, and industrial projects. For decades, this relationship benefited both economies. However, Canada is increasingly discussing ways to strengthen domestic investment through initiatives targeting energy, artificial intelligence, critical minerals, manufacturing, and major infrastructure projects. Because Canadian pension funds manage nearly $1 trillion in U.S.-linked assets, even a modest reallocation could direct tens of billions back into Canada. The larger concern isn't an immediate shock, but whether long-term investment priorities are beginning to evolve. Yet agriculture and investment are only part of the story. Across the Atlantic, European policymakers have reportedly been mapping an entirely different set of American dependencies. Ones tied directly to medicine, semiconductors, artificial intelligence, and the technologies powering the modern economy. Europe's leverage map, America's dependencies revealed. While trade disputes often grab headlines, European policymakers have reportedly spent years studying areas where the United States depends on overseas suppliers. Pharmaceuticals stand out as a major example, with European companies playing an important role in supplying ingredients used in many medications sold across America. Europe also occupies a critical position in semiconductor manufacturing. Companies such as ASML, Zeiss, and Trumpf produce highly specialized equipment required to manufacture advanced microchips. At the same time, Europe supplies industrial systems that support rapidly expanding AI infrastructure and data centers. Combined with its massive consumer market and substantial holdings in American financial assets, Europe possesses multiple sources of influence. Increasingly, leaders are discussing economic resilience, strategic autonomy, and long-term leverage. And that's where the picture becomes truly fascinating. What began as isolated dependencies in farming, finance, and technology is starting to reveal a much larger pattern across the global economy. Before we continue, if you're enjoying this deep dive into the forces reshaping global trade, industry, and the automotive world, take a moment to subscribe to Highway Herald. Your support helps us bring you more in-depth analysis, vehicle updates, and industry insights every week. Now let's connect all of these developments and examine what they could mean moving forward. The global power shift, new rules emerging. For decades, the United States benefited from a global system where allies relied heavily on American markets, investment opportunities, and security partnerships. Today, however, the picture is becoming more complex. Canada remains a dominant supplier of potash. Europe controls critical pharmaceutical and semiconductor technologies, and allied investors maintain trillions of dollars inside American markets. At the same time, governments are increasingly encouraging domestic investment, reshoring key industries, and strengthening economic self-sufficiency. While cooperation remains the public goal, policymakers are clearly identifying vulnerabilities and preparing contingency plans. For the automotive industry, these developments matter enormously because vehicle manufacturing depends on stable supplies of semiconductors, critical minerals, energy, transportation networks, and investment capital. Global interconnectedness is becoming impossible to ignore. Taken individually, each of these pressure points may appear manageable, but together they reveal something far more significant. A global economic landscape where leverage is increasingly distributed among allies, once viewed primarily as partners. Verdict: allies hold more leverage than America expected. The biggest takeaway from this story is not simply tariffs, political rhetoric, or diplomatic disagreements. It is the growing realization that America's closest allies possess significant economic influence through resources, technology, investment capital, and critical supply chains. Canada's position in fertilizer production, Europe's role in advanced manufacturing technology, and trillions of dollars in allied investments all highlight how interconnected modern economies have become. For automotive enthusiasts, these developments extend far beyond geopolitics. Vehicle production relies on stable semiconductor supplies, affordable energy, strong industrial investment, and reliable global trade networks. When one piece of that system changes, the effects can eventually reach factory floors, dealership lots, and consumer prices. The larger question is whether governments can strengthen cooperation before strategic dependencies become major negotiating tools. Once supply chains are redirected and investment patterns shift permanently, reversing those changes becomes far more difficult. The outcome remains uncertain, but one thing is clear. Decisions being made today in trade, investment, technology, and resource development could shape economic relationships for years to come. Now we'd love to hear from you. Do you believe America should reduce its dependence on foreign suppliers for critical resources and technologies? Which issue poses the greater long-term challenge? Fertilizer dependence, investment capital shifts, or semiconductor supply chains? How do you think these geopolitical and economic changes could affect the automotive industry over the next decade? Share your thoughts and experiences in the comments below. We always enjoy hearing perspectives from fellow enthusiasts and industry followers. If you enjoyed this analysis, be sure to subscribe to Highway Herald and turn on notifications so you never miss our latest vehicle updates, industry developments, and automotive insights. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.